welcome. Have you ever wondered why a company's stock might go down right after a huge, exciting product launch? It seems backward, right? Well, that's exactly what happened with Apple recently, and we're going to break down what went wrong and what it all means for the company's future. On September 9, 2025, Apple had its big awe-dropping event where they unveiled the highly anticipated iPhone 17 series. They showed off the new iPhone 17, the ultra-thin iPhone Air, and the top-of-the-line iPhone 17 Pro and Pro Max. But it wasn't just phones. They also announced updates to the Apple Watch SE 3, Series 11, and Ultra 3, as well as the AirPods Pro 3 with a cool live language translation feature. Sounds like a lot of great stuff, right? But despite all the buzz, Apple's stock price actually fell 1.5% on the day, translating to a loss of tens of billions of dollars in market value. So why did investors hit the brakes? It comes down to a few key reasons. First, there's a classic phenomenon in the stock market called sell the news syndrome. Almost all the big features, like the new A19 chip and camera enhancements, had already leaked online. Since investors already expected these updates, the official announcement lacked any big surprises to get them excited. Second, investors are getting worried about margin pressure. Apple has been absorbing over $1 billion in US tariff costs without raising its prices, which means their profit margins are getting squeezed. Finally, everyone is talking about artificial intelligence, or AI, but Apple's AI announcements were pretty modest. While competitors are pushing the envelope, Apple's public-facing AI strategy still seems a little vague. Here's the thing though, this kind of post-launch dip is actually pretty common for Apple. Historically, the stock often falls slightly on the day of a big iPhone announcement, but tends to rebound and climb higher in the following month. For example, back in 2007, the stock barely moved the day after the first iPhone was launched, but surged nearly 16% in the month that followed. So what should investors be focusing on instead of one day's price dip? Three things matter most for Apple's long-term health. First is its global market share. Apple is a leader in worldwide smartphone shipments, especially in crucial markets like China and India. Second is its dominance in the premium segment, where it controls over 60% of all smartphones priced above $400. This pricing power helps maintain high profit margins. The third and biggest factor is services growth. Apple services like the App Store, iCloud, and Apple Music continue to grow at double-digit rates, and this is a much bigger indicator of the company's long-term value than a short-term dip after a product launch. Ultimately, the iPhone 17 stock dip was a classic case of short-term investor anxiety. The real story for Apple's valuation will be told over the next few months as we see how they manage costs, whether they unveil bigger AI breakthroughs, and how much demand there is for the new iPhones, especially in key global markets. If Apple's long-term innovation engine is still running strong, this could just be a blip on the radar.